Not doing too badly. Let's get in our experts in on the show to try and understand what to do in a scenario like this. I believe Kush Bora is with us. And after a really long time, we have Mr. Sunil Subramaniam with us as well. So lovely to talk to him. Both of you, lovely. Great having you. Thanks for joining in, Mr. Subramaniam. Lovely seeing you. It's been a really long time. And I'll come to you in a moment, sir. But I'll first, as the norm of our show, get in our expert, Kush Bora, to try and tell us how does he view this uptick today? Is it sustainable from a trade perspective? And of course, what are the stock recommendations from Kush's side? Kush, good afternoon.
Very good afternoon, Neeraj. Very good afternoon to the panel and the viewers. I think this move is just an extension or a continuation of the short covering rally that we've been talking about. Certain indicators that we track haven't really given us that confirmation that this rally is here to sustain. Maybe a few more good days might change that, but at the moment it doesn't seem to be the case. Now I'll talk on Bank Nifty and Nifty and Bank Nifty both. Yesterday at the in the closing show we spoke of the 23,200 straddle being visible very clearly, and if you had put the premiums together, that would have been about 120 odd points. Nifty is fairly there, so not surprising with the kind of move that the Nifty is giving. It's made those gains but sustained also, hasn't really built onto those, nor has it given up. So it's that straddle still playing out. Maybe once the expiry is passed, you'll get a clearer view tomorrow, perhaps on Monday, as to whether the direction is upwards and it does continue trading upwards or not. At the moment, for me, Nifty is in a bit of a no trade zone. As far as Bank Nifty is concerned, very heartening to see that we've been talking about this extension of the recovery rally in the Bank Nifty to levels of 49,500, almost there. Now I think it's not a bad idea to book some profits. I think beyond 49,900, 50,000 is where there'll be some confirmation of an upswing. And there you could take a long trade. There's a possibility that the rally might fizzle out from here on. So I will be booking profits on the long trade that we've discussed on Bank Nifty, where the second target of 49,500 has been achieved today. So book profits on Bank Nifty, no trade on Nifty. So essentially a no trade on both of these, but slightly more optimistic on the Bank Nifty.
Okay. And Kush, what are your ideas for the afternoon?
Given the texture of the market, today no short trades yet. Both on the long side. The first is Reddington. The stock's been gaining ground for the last couple of sessions and held its ground, amidst the market volatility as well. So from a near-term perspective, you're looking at targets of 212 and 217 with the stop loss around 207. Another stock which did feature on our list a couple of days ago, but due to market volatility, we didn't really put out as a trade, and heartening to see that it's actually moving up, which is RK Forging. This stock too is actually gaining ground, I think very close to the high point of the day. But with the kind of volume and price action that you're seeing today, and the moves that we've spotted over the last 3-4 sessions, I think this has enough and more room to go to 1040 level. And intermediate target on this one is at 1015. Stop loss on this one comes in at 955.
Okay, RK Forging's big move too. Sunil Subramaniam is, like I said, with us. Mr. Subramaniam, great talking to you. As I said, it's been a really long time, but. If you think about how asset classes are doing and markets are doing currently, Mr. Subramaniam, a bit of a spurt coming into world markets by and large after the data yesterday. Do you think this can continue, or is it difficult to really call out about markets currently, considering that we are in a slightly volatile environment?
I think it's very difficult to call out markets because data is, even from the US, it's very confusing. One kind of a print comes one way, another way. So every time data gets released, there's a reset by the markets. Second is, I think that there's a lot of expectancy around Trump, and the typical market buy on the rumor, sell on the fact will be at play. When Trump actually takes charge on 20th and the weeks thereafter, I will think that a lot of the rhetoric in the run-up to the elections and the run-up to the inauguration, I think in actual reality, you'll see a more pragmatic Trump. First of all, on tariffs, for example, implementation of what he's promised as tariffs across the board will lead to a spurt in inflation that he doesn't want. Second, I believe that the strengthening of the dollar, right, is not something that Trump wants. I think if Trump wants to make America great again and boost American business, exports are a big thing, and a strong dollar will hurt American exports. So I think that Trump would actually favor a gradually weakening dollar. So these are contrary to the moves happening in the market now. So as his term then comes into play, I expect a lot of his announcements to be more pragmatic and some of these gains will then give way. So that's my view as far as the market, this thing is concerned. The other thing is also, of course, is that domestically also, we are having a very uncertain period. You have earnings coming through on the back of a weak earnings last time, weak GDP growth, expected GDP growth to improve, but will earnings also keep pace and improve? Wait to see. Second, you also have to have the economic survey come out a day with the budget. How's the economy really doing? That's again a call need to take. The budget itself, and then the RBI policy post the budget. So this even field calendar, and I think very hard to take a clear-cut view on the market in the next 2 to 3 weeks. And it's going to be a very iffy, choppy, turbulent market. Consolidation will probably be the key here.
Rajesh, not sure. We've taken your picks for this afternoon, please. First off, welcome, Rajesh. Sorry, apologies. Welcome, Rajesh Palvia, also joining in technical and derivatives research at Axis. Rajesh, what do you make of the markets in terms of levels, both on the Nifty as well as the Bank Nifty?
Good afternoon, Harsh. Good afternoon, everyone. So, looking at the recovery from the recent low of 23,000, especially on the put writers are aggressive at 23,100, 200 strike. Even in the today's session, especially for today's expiry, 23,300 put writers are also aggressive today. So I think especially for today's session, I think Nifty options for weekly expiry option would be around 23,350 to 23,370 kind of zone. And we believe that, in the last half an hour of trade would be interesting, and we may see a run up towards 23,370 to 400 kind of zone also. So maybe expiry would be a little higher from the current level, especially for today. Looking at the near-term setup, we believe that this momentum can extend, and possible rally can extend to 23,450, even 500 kind of zone also. So at this juncture, we are holding our bullish view as well as the positions with stop loss of 23,200. That's the stop loss one needs to keep. And for Bank Nifty, till Bank Nifty is holding above 49,200, I think here also we may see another round of short covering, which could take Bank Nifty higher to 49,800 level in the near-term perspective. So both indices are looking bullish at this juncture. On the stocks front, two stock ideas, both are on the buy side. First one is Biocon, very strong buying action since last couple of days. Stock managed to give breakout of its previous swing high. Looking at the data, it's a long built up in the data. So we believe that Biocon may extend further more upside, possible target towards 408 we may see. So one can buy Biocon with stop loss of 387. Another stock is Minda Corp. Again, this is third consecutive day where the stock is making higher high-low formation. Stock managed to view breakout of its multiple supply zone on a daily, weekly time frame. Looking at the breakout, we believe that stock has potential to move to reach to the previous swing high, which was around 3,620 in the month of September 2024. So I think stock is ready to move to that swing high. So we are projecting target towards 620 for Minda Corp. One can buy with stop loss of 580.
Okay. So that's some key ideas to watch out for as well. And by the way, would want to pick up both our trading guests' views on what could happen on a bunch of things, as well as Mr. Subramaniam's view, of course, on how does he see let's say some of the themes playing out. But before that, I think one of the themes that has really played out well today has to be insurance, and in specific HDFC Life. So let me get in Harsh first to talk about what stood out for HDFC Life, Harsh.
Well, yes, thanks for that, Neeraj. So just 5 quick factors, probably the top 5 factors that stood out in HDFC Life's numbers. One is the margin increase, sharp sequential margin uptick. Why is that so? We'll come to point number 2. The product in terms of pricing the environment overall, industry-wide, in terms of pricing has gotten better. And it's across products except annuity is what the management said as part of its commentary. Now, in terms of surrender value regulations, the impact on margins, which might have been overstated by many analysts, just 10 basis points is the impact on HDFC Life. So they've been able to recover a large part of that regulatory overhang into the Q3 numbers, and hopefully that continues going forward as well. At least that's what's getting built into the price also likely. Listing of peers should in fact reduce the competitive intensity, because it should make peers more conscious of how investors think or rather in case of listed markets, disclosures, explanations to investors, and that should hopefully aid the pricing environment going forward and bring rationality to pricing. That's what they suggested. So therefore, listing of peers is a positive, and growth guidance is maintained. APE growth of 18%, VNB growth of 15%. The APE growth number was 18 to 20%. That was the band given, so lower end of the band. VNB 2, 15 to 17%. 15% is lower end of the band. But overall, just that margin improvement, I think, has caused HDFC Life to stand out in trade today. A solid gainer, 8%.
Yep, a solid move indeed. And well, courtesy earnings, right? And Mr. Subramaniam, that's the question really. Can earnings do better than what is anticipated? Because we're seeing some strong responses to good earnings because the street doesn't expect earnings to be good.
Yeah, I think that sequentially earnings should be better than the last quarter.
Obviously.
The reason for that is that, as we all know, equities are a lead indicator of the economy. The previous quarter's earnings actually led to a drop in the GDP to 5.4. Now, the RBI governor stated that this quarter he expects the GDP to come at 6.8. Assume that he's right, or even if he's not right, it's not 6.8, but it's still 6.4. It's still better than 5.4. So if that's true, then the earnings has to reflect that. So I believe that sequentially, quarter on quarter, earnings will be better. Now, whether they will meet the analyst expectation on that, I think sector to sector it varies, because analysts have their own way of coming at the consensus. So to that extent, there could be disappointments in some sectors and upsides in some sectors. But overall, I think we'll see a better earnings quarter than the previous. But that being said, Neeraj, one thing I want to point out is that I think more than the earnings quarter, it's the guidance that's far more important this time, because from an FII perspective, it's a calendar year which they look at. And this is the first time that you're going to get a guidance for the full calendar year. And I would say that the market prices will react more to guidance than to reported earnings.
Okay, to guidance than to reported earnings. That to be watched out for. Mr. Subramaniam, from your erstwhile role as somebody who headed a whole AMC, do you now look at specific pockets, or is it a market-wide view that you currently have? I would love to know so that I can question you accordingly.
No, I do a market-wide view, but I'm still no-go on stocks because I'm an independent director.
Of course. Yeah,
so
that's saying.
On sectors and the market, I do a complete market coverage.
Got it. Okay, then I have one quick question, Mr. Subramaniam, to you as a follow-up. Capital market plays or non-lending financials, since HDFC Life, for example, is a part of non-lending financials, right? Yeah. So do you look at, I mean, what's your view on, let's say, for example, the insurance sector or the broking sector, or if I ask you, the AMC sector?
Well, and then there's a fourth sector. There's a fourth sector there, which is the infrastructure, capital market infrastructure sector. Okay. So I'm bullish on all of them, but varying degrees. Okay. So top of the pile for me are the wealth managers, because you're seeing this month-on-month equity flows go up. You've seen the SIP book shoot up to past 26,000 crores. Who's benefiting from that? It's the distribution houses who are mobilizing those SIPs. So the fee-based earnings. Now, there are banks which have very good distribution arms. There are private sector players who are listed like Angel One and 361 and all of that. So I think that, to me, the one continuing story of India is every other sector is seen as ups and downs. But the continuous shift of flows into the capital market and to broking and everything else has been a consistently successful story on the back of a rising per capita income. So to me, top of the pick would be these. The next would come in, for me, the insurance companies, because along with them, they are the ones who get the flows from the thing. And I think COVID has played a big role in an insurance mindset shift, both for life insurance and for general insurance in terms of health. I think that's one allocation of money. And one thing which I want to point out, the underlying fact here is that the per capita income of India, which is now touching about 2,800, I think it'll cross $3,000 in this current year if you take the latest GDP numbers and divide by the population. But there's a huge disparity. What's happening is the rich are getting richer. So this 2,800, I would say, would be a sharp increase. There would be $4,000 plus a lot segment and a lot lagging behind at 1,500. So the K-shaped income breakage is what we are seeing in the K-shaped consumption, but it's also seen in K-shaped in the savings. So the higher end people now, you see PMSs, AIFs, all of them getting a lot of flows. So to me, the financialization of the country, along with the youthfulness of our country, I think those are the driving factors for this side of the balance sheet on the financial services. So I feel that all of these players, see, broking is the one where the SEBI regulations on the F&O and all of that. So, and we've seen even Zerodha's promoter warn down the estimates for the next year. So that's the only one where maybe volumes will be down year on year, but all the rest of the plays here, whether it's insurance, whether it's AMCs, whether it's wealth management outfits, or it's the stock market infrastructure companies, all of them, I think, are going to do well. And they are a consistent long growth compounding story in the making.
All right. Thank you so much, Mr. Subramaniam, for coming in, speaking with us. We'll let you go on that note. Thanks for those views.